Good afternoon and welcome to GrainTV. It's February 28, 2013. I'm Logan Burgess. To my right here is Cody Bills. Well, Cody, let's jump into fire tip here. See how the grain's traded on a Thursday. As you can see, we're now looking at the May contracts. Today was first notice for those March futures deliveries, so it's time to start rolling into May. As you can see here, we had corn up 9.5 cents, soybeans picking up 12 cents, Chicago wheat was up 4, Kansas City wheat up 9. If you guys want to get live quotes over at your home or office, visit us at grainhedge.com. You can take a no-obligation demo of the platform that you see here in front of you. But Cody, kind of break down the action that we saw today. It seemed like fundamentally we had some things pushing the market. Kind of what's your take on the action?
Well, this is really, I think, a continuation of the snapback that we've seen the last couple days. We also had some fundamental news to add a little bit of potency to this snapback. Right. One of the things is export sales came out this morning. Corn and soybeans performed very well. They beat analyst expectations, and I think that helped out the front months. If you also look for, wheat, we had Saudi Arabia actually come out with a tender for some soft wheat and some hard wheat. And that's going to be interesting to see if the U.S. wins any of those sales. We have had an incredible slide in prices in the last couple months, and we've gotten a lot more competitive on the global market. So it's just going to be interesting to see. I think there's possibilities for demand in that wheat market. Right. As for soybeans, we did have an announcement out of the Buenos Aires Grain Exchange that they're revising their 2012-2013 soybean forecast to about 48.5 million metric tons versus 50 million metric tons that they had previously. Yeah. Currently, the USDA is sitting right around 53 million metric tons. So we're, about 4.5 million metric tons below. I think that's kind of foreshadowing for the next WASDE report. We're most likely going to see a revision lower for Argentina.
Yeah, certainly a smaller Argentina soybean crop is going to help out U.S. export sales here moving forward. If we take a look just at the numbers that we saw today in today's export sales report, looking at old crop beans, we did see 689,000 metric tons reported there, and that was certainly very good to see here for the bean market. This is coming on the heels of last week's report where we actually saw net cancellations. And if we jump into this slide here, basically charting our progress here through the marketing year, the red line is our expectations on a weekly basis. The blue line, or the blue bars here, are what's actually reported. And as you can see, we're still looking at the USDA needing to make a revision at some point by about 110 million bushels here on their yearly export sales projections. Corn, though, very different story. Still 47 million bushels behind pace needed to meet USDA expectations. On this week's sales, though, we did have some pretty good numbers come out today. We saw 302,000 metric tons reported sold there. So as you said, certainly adding some potency to some of the snapback that we're seeing here today. In general, we're still behind pace, though, in our minds to meet USDA expectations.
Do you think there's any possibility that corn will be able to catch up? I mean, if you look at this this corn slide here of the actual export sales that we've been able to record here, you can see all throughout the year we've just disappointed. Right. The last couple of weeks we're finally trading up around that red line. Do you think that we have any possibility, any hope of picking up sales in the second half of the marketing year?
Yeah, well, looking at our model here, we've built in quite a deficit here throughout the marketing year. We're about halfway through, so obviously there is still time to right the ship, but a couple things are going to have to come through. We're going to need to see certainly a good crop out of South America, which at this point, we're going to have to see a short crop out of South America pushing some of those export sales into the U.S. market. And at this point right now, it doesn't seem like that's in the cards. Certainly we've heard talk of logistical issues, but it seems like in general, corn continues to have a really hard time gaining those export sales.
Yeah, I would definitely agree with that. As for wheat, let's just take a quick look at wheat. And I think this is the one thing that we've got to kind of balance. It's this tug of war between corn and wheat. Yeah. Wheat is obviously can be used as a feed if it continues to slide. It didn't have the same kind of price bump up here that corn did today. So we just got to be wary that wheat could be used as a substitute if that continues to slide, and that could draw corn prices down as well.
Yeah, right, Cody. I know before the show, you and I were talking a little bit about Dees 13 corn in particular. Here in the office, we've received a lot of calls. People wondering about strategies, maybe when to pick a price point for Dees 13 corn, because it does look like we found a little bit of a near-term bottom here. Can you kind of break down through the action for us right now? I know we were looking at a chart earlier of a daily candlestick chart here on that contract, and one price level kind of came in mind. Can you kind of break down what we were looking at there?
Yeah, absolutely. Why don't we take a look at the Fire Tip Trading Platform. This is a chart that we built. It is a chart of the December futures contract, so this is a new crop contract. what you're looking at is a candlestick chart, which means that each one of these bars represents 1 day worth of price activity. And basically what you're seeing here is December, this new crop contract really has lost a lot of ground in the last couple months. And I think that there's a good chance that if this thing comes back, we're going to want to look at some areas to start pricing some of that 2012, or excuse me, that new crop grain.
Right.
So the bottom line here, I think, when you look at this 570 level, not only do you have a trend line that's kind of pointing toward that 570 level, but you also have a previous low at that 570 level. I would say if we do get any kind of a snapback, use this to lock in some price protection, whether it's futures, whether it's an option, or whether it's just outright pricing in the forward months in the cash market. But I think it is prudent to lock in something here. Sure, it's not a home run, but what it is a base hit, and that's fine with us here at GrainTV.
Yeah, absolutely. If you guys have any questions about that, you can always give us a call here at the office. Our number is 877-472-4607, or as I said, you can go over to grainhedge.com and take a free demo of the platform that you see here on GrainTV. But you know, in general, Cody, I think that's what we saw in the grain market for today. Coming down the pipe tomorrow, there are expectations that the CME group is going to release the new trading hours here, so we're certainly going to be following that. We'll be tweeting that when those numbers come out and be discussing that on GrainTV as well. All expectations are for grain trading hours to be scaled back a bit. To what degree, though, that's still left to be determined tomorrow. So we'll keep you posted on that front. But thanks a lot for joining us here on GrainTV, guys. Have a great night. We'll see you tomorrow.